What's up, homeowners? I'm glad you're watching this video. My name's Paul. I'm with Texas Family Roofing. I'd like to go over a couple of things. It's not going to be as fun as all the other stuff you see on our Facebook, Instagram. We're doing Dance Friday. That stuff is great. We are going to go over some numbers today. So hope you guys have your insurance paperwork with you. We'll go over that together. I'll try not to bore you too much. So I got all this stuff here ready to go. Let me tell you how this works with insurance. Insurance company has already come out to your house. They've done a full inspection of your roof, maybe windows, screens, siding, everything. They've looked at it and said, okay, we've already inspected everything. They're going to put a dollar value on the damages, right? So if you'd like, get the paperwork out now. We'll go over it together. Insurance has gone out, looked at everything, said, okay, we'll say I'm the customer. We've already estimated that all of the damages on your property is what they call an RCV, replacement cost value. So that replacement cost value is $20,000. Now this is just an example. We want to keep it simple so we can understand it a little bit easier. So $20,000 worth of damage on your house, Paul, and they basically tell you, here's the paperwork, and they give you a check, right? So we'll go over the rest of it. The second part of this replacement cost value is what they call depreciation. So they're going to depreciate your roof or windows or doors or screens or siding or whatever it is by a dollar amount. In this case, we did 50%. 50%, they depreciated your $20,000 claim, and now you are at $10,000. So, or they're going to depreciate it by $10,000, right? And they're going to hold on to this money until the job is complete, all of the photos have been submitted, and everything is looking tip-top shape. So $20,000 minus the $10,000 that they're hanging on to, now you have what they call an ACV, or actual cash value. So $20,000 minus the depreciation equals $10,000. That's the actual cash value. Saying, okay, it's actually worth $10,000 right now until you get everything done. Now you have your ACV. What they're going to do next is they're going to deduct your deductible. Your deductible here, which I have in red, is $1,000. Now this is all, the only thing that you're responsible for is $1,000, right? So this is you, this will come from your personal bank account. And it says $1,000, that's all you have to pay, right? So they're gonna take it out of the claim, and they're gonna say, Mr. Perez, you're responsible for the $1,000, and what's left over is $9,000. So the check that you're getting from the insurance company, the very first check, is going to be the net claim. $9,000 plus my $1,000 that I'm responsible for. Once the job is complete and we submit photos, invoices, and all of the above, they're going to release the other $10,000. So 9 plus 1 is 10. The other 10 ends up with your RCV of $20,000. So hope that makes sense. Another analogy that a lot of the guys like Nick and Eric like to use, they use for the deductible, they like to call what they call a copay. They're just like if you go to the doctor, you have a doctor's appointment. Doctor's going to take care of all of the work, right? You're going to set up the appointment. The insurance is going to pay for everything. All you're responsible for is your copay. So let's say your copay is $100. That's all you're having to pay is your copay, and the doctor's going to bill the insurance for everything else, correct? It's the same strategy here with your roof or home insurance. Your deductible is equal to your copay. So hope that makes sense. If not, you can reach out to us directly, texasfamilyroofing.com. You can call the office. Anyway, this is just something I want to go over. Make sure you guys kind of understand it. If you have any questions, reach out to us, and we'll see you guys soon. Don't forget our Dance Fridays. We'll see you guys. Bye.